Live from New York, I'm Bonnie Quinn.
And from London, I'm Guy Johnson. This is Bloomberg Markets. Time now for Futures in Focus. Joining us now from the CME, Alan Nuckman of Agora Financial. Alan, stocks are down. Are people talking about buying the dip yet?
Well, this is a stock slump. Let's talk about percentages, not points. We're down 1.5%, and the low was made on the open. Let's see if it's going to test and reject that low one more time. That would be a very positive sign that we've seen over and over again in this marketplace. We're in a bull market. People have to decide, is this bad enough to buy just yet? Again, we made all-time forever highs just last week, and we had key reversals technically last week, so that was a sign that there could be a little bit of a slump. Let's see how things stand after a couple sessions.
What do you look... Okay, so a couple of sessions. You wouldn't be in yet. Today doesn't feel like the day?
Well, it depends. It depends on how patient you've been as waiting for a pullback. We've all been waiting for this market to pull back. We went up more than 10% straight up without any breaks in the last, what are we looking at, almost 4 months. So people have been itching to get into some of these stocks. They keep saying, I want to buy at a lower level. I want to buy at a lower level. And there haven't been any pullbacks. So as a trader, it's been difficult because you measure the markets based upon how they react and on pullbacks. And that's what we have to see happens today. But let's look at the numbers. We saw a little rally in treasuries, but rates are not down at lows, so that's not an emergency situation. And the VIX is at 18 right now. The VIX was at 36 in December of 2018, so just over a year ago. That's when we really had some volatility. We're still seeing a series of lower highs in volatility, and this is a level we were at in October. So as far as looking at the markets don't feel the emotion that we do right now.
It's a big week, though. There's a lot of other things coming up. You got Apple's numbers.
Exactly.
Everybody's got a chunk of that. You got the Fed coming up as well. To what extent are those key events likely to keep people on the sidelines a little bit too?
Well, the Fed's not going to do much. There's a 50% chance there'll be a cut in July and a 75% chance it'll be a cut by December. So their hands are somewhat tied. They don't have many bullets left in the gun to help support the market. But remember the psychology of and the sentiment of the policymakers. They're going to do everything and anything they can to give this market a push. And you know, that's just the reality of where we are. With interest rates at this ridiculously low level, money is going to continue to flow into stocks. So I'm looking at stocks that maybe haven't participated in this rally and see if they can play some catch-up. I wouldn't say it's over yet. I'm not a doctor, and I'm not going to play a doctor on TV, so I don't know how the market's going to react to this, but we've been through this game before, and each and every time the markets have overcome any of these crises over the last 10 years because it's about earnings, and corporations are doing extremely, extremely well.
Okay, watch this space. Alan, thanks very much indeed. Alan Nuckman joining us from Agora Financial.